America is drowning in debt. As of today, Americans owe over $1 trillion in credit card debt, a record-breaking number that keeps climbing. But let me ask you, after paying bills, rent, and sky-high interest, how much of your paycheck is actually yours? If you feel like you're stuck in an endless cycle, you're not alone. For millions, credit cards have become a survival tool rather than a convenience, bridging the gap between what they need and what they can actually afford. But with rising interest rates, stagnant wages, and an economy that favors lenders over borrowers, credit card debt is becoming a financial trap that's nearly impossible to escape. One of the biggest reasons credit card debt is skyrocketing is because wages have not kept up with the cost of living. Over the past 2 decades, rent, healthcare, and food prices have all surged, while real wages have barely moved. When people don't earn enough to cover their basic expenses, they have no choice but to put everyday necessities on credit cards, often with no clear way to pay it off. And here's the real kicker. Credit card companies don't just want you in debt, they want you trapped in it. Have you ever noticed how your balance never seems to go down, even when you make payments? That's because interest rates are at record highs. The Federal Reserve's rate hikes have pushed the average credit card interest rate past 22%. And for retail store credit cards, it's even worse. Some now charge over 33%. This means that if someone carries a balance of just $5,000, they could be paying over $1,000 a year just in interest alone. The longer the debt remains unpaid, the more it snowballs, making it almost impossible for borrowers to get out. Now think about this. Are you putting more everyday purchases on your credit card than you used to? If so, it's not just you. Inflation is forcing millions of Americans to rely on credit just to survive. According to a recent survey, 46% of Americans now carry a balance on their credit card due to an emergency expense, whether it's car repairs, medical bills, or an unexpected rent hike. And with prices still climbing, many have no choice but to keep swiping, just to survive. The pandemic also played a major role in reshaping how Americans use credit. While government stimulus checks temporarily helped reduce household debt in 2020, that relief didn't last. Once the stimulus money ran out and inflation took hold, credit card balances surged back up, this time even higher than before. More than 70 million new credit card accounts have been opened since 2019, meaning more people than ever are relying on borrowed money to get by. The worst part? This cycle of debt disproportionately affects lower-income Americans, who are often forced to use credit cards for basic needs rather than luxury spending. While the wealthy can use credit cards strategically, paying off balances in full and earning rewards, many working-class Americans have no choice but to carry a balance from month to month, paying exorbitant interest rates that keep them trapped in financial hardship. Credit card companies, of course, profit from this system. The longer people stay in debt, the more banks make in interest payments and late fees. It's a business model that thrives on people struggling, ensuring that even as wages stagnate and costs rise, the debt machine keeps turning. At this rate, credit card debt isn't just a personal finance issue. It's a financial time bomb, set to explode. If more Americans keep maxing out their credit and falling behind on payments, we're not just looking at an individual crisis, we're looking at an economic collapse that could rival 2008. The question isn't just why debt is skyrocketing, it's how much longer people can survive before everything collapses. But here's the scary part. Credit card debt is just one piece of a much bigger problem. Even people earning 6 figures are struggling, not because they're reckless, but because the system is designed to keep them spending, no matter what. The pressure to keep up, to spend more, to never stop consuming. It's a financial trap almost impossible to escape. That's not bad budgeting. It's something called lifestyle creep, and it's one of the biggest reasons even high earners feel broke. But lifestyle creep isn't just about reckless spending. It's fueled by social expectations, psychological pressures, and an economy that encourages consumption over financial security. At its core, lifestyle creep happens when people start making more money and automatically increase their spending to match their new income. A small raise at work suddenly justifies eating out more often, upgrading a car, or moving into a nicer apartment. What once felt like a luxury becomes an expectation. Over time, those higher expenses become the new normal, making it feel impossible to cut back, even when financial trouble hits. The problem is, while income might rise, so do fixed expenses, things like rent, car payments, and monthly subscriptions. These costs don't adjust when income fluctuates, which is why so many high earners still end up living paycheck to paycheck. In fact, a 2023 Lending Club report found that more than 60% of Americans live paycheck to paycheck, including nearly half of those earning over $100,000 per year. This means that even people making 6 figures often feel like they're barely getting by. But lifestyle creep isn't just a personal choice. It's deeply ingrained in American culture. The US economy thrives on consumer spending, which accounts for nearly 70% of GDP. Every aspect of society is designed to keep you spending. Your bank, your favorite brands, even your own friends and family. The second you make more money, there's already something waiting to take it. The entire system is engineered to make sure you never feel like you have enough. One of the biggest contributors to lifestyle creep is inflation, which has eroded purchasing power at the fastest pace in 4 decades. Since 2020, rent prices have increased by over 30% nationwide, grocery costs have surged by nearly 25%, and healthcare premiums have continued to rise. This means that even when people earn more, their money doesn't go as far as it once did, making them feel like they have to keep increasing their income just to maintain the same standard of living. There's also the growing trend of revenge spending, a post-pandemic phenomenon where people spend aggressively to make up for lost time. After months or years of restrictions, many Americans are splurging on travel, luxury goods, and entertainment, even at the cost of taking on more debt. According to the Federal Reserve, credit card balances increased by $45 billion in just the third quarter of 2023, the largest jump in over 2 decades. Many of these purchases aren't necessarily extravagant. They're everyday expenses that have become harder to afford. For younger generations, financial frustration is turning into a spend now mentality. Studies show that millennials and Gen Z are more likely to spend impulsively than older generations, often due to financial pessimism. Many young people believe they will never be able to afford a house, retire comfortably, or escape student loan debt. So instead of aggressively saving, they choose to enjoy their money now. A 2023 Bankrate survey found that 55% of Gen Z and 46% of millennials live paycheck to paycheck, with a growing number relying on buy now, pay later (BNPL) services to afford even small purchases. The real issue with lifestyle creep isn't just spending more. It's that it often prevents people from building true financial security. Instead of using extra income to pay off debt, invest, or save for the future, many find themselves stuck in a cycle of earning more but never feeling ahead. The result? A middle class that looks successful on the surface but is drowning in hidden financial stress. Breaking free from the spending trap requires a complete shift in mindset. It means recognizing that financial success isn't about how much you earn, it's about how much you keep. But in a society that constantly pushes people to spend more, resisting lifestyle creep isn't just a financial challenge. It's a fight against an entire system built to keep you trapped. And if we don't start questioning it, if we don't change how we view money, debt, and success, we're not just looking at struggling households. We're looking at an economy heading for disaster. So the real question isn't just why debt is skyrocketing, it's how long we can keep pretending this system is sustainable. What happens when it all comes crashing down?